Okay, so let's talk about SoFi. You know, many of us probably still have this image of them, mainly as the student loan people, maybe some apps.
Right, that's definitely where they started.
But it feels like something, well, major has changed. Like the whole company has done a complete 180.
Oh, absolutely. It's a really dramatic transformation. What started as, a pretty specific niche player has definitely morphed into this powerhouse fintech entity. It's quite a story.
Yeah, and that's what we want to unpack today in this deep dive. We're looking at how they pulled this off based on a really insightful blog post from June 25th, 2025. It really lays out their whole journey.
It does. It covers a lot of ground.
So our mission here is to figure out how SoFi, as the source put it, kind of flipped the script on all that early skepticism, and maybe why they're a company you really need to keep an eye on this decade.
Sounds good. Where should we start?
Let's go back to the beginning. 2011, right? They launched very much the underdog, laser-focused on student loan refinancing.
Yeah, and not just any student loans. They targeted a very specific group. High earners, often with fancy degrees, but kind of drowning in high-interest debt. Millennials who felt, sort of overlooked by the big banks.
Seems smart focusing like that, but narrow.
Well, exactly.
Yeah.
Starting niche is often smart, gets you a foothold. But it does limit your growth potential, right? You can't build a massive company just on that.
And that played out for them for a while.
It did. Through most of the 2010s, they tried other things, personal loans, mortgages, some investment stuff, but actually making consistent profit. That was tough.
Right.
And, that naturally led to a lot of doubt on Wall Street. People wondered if the model was really viable long term.
Okay, so if they were struggling with that narrow focus, what was the big shift? It feels like Anthony Noto coming in as CEO in 2018 was maybe the catalyst.
That was huge.
Yeah.
Absolutely huge. You look at his background, Twitter CFO, Goldman Sachs. This wasn't someone coming in to just, manage the status quo.
He had a bigger plan.
Oh, yeah. A much bigger vision. He wanted to build, and this is his term, a vertically integrated, full-stack digital financial ecosystem. Basically, everything financial, all in one digital place, built on their own tech.
Okay, vertically integrated. What did that mean in practice? Acquisitions.
Exactly. Strategic ones. First, Galileo in 2020. Now, Galileo is really interesting. They build the underlying API tech, the plumbing for banking services that lots of other fintechs use.
Oh, like Chime, Robinhood.
Precisely. So SoFi wasn't just offering its services. It was suddenly providing the infrastructure for competitors, for the whole industry. That's a massive shift.
Wow, okay.
Then in 2022, they bought Technisys. That added cloud-native core banking capabilities. Think of it like getting the really sophisticated engine for a modern digital bank.
Yeah.
These weren't just small pickups. They were fundamental strategic moves. Chess moves, really.
Okay, so Noto's building the infrastructure, making these big plays, and then comes the moment that, it seems, changed everything externally, getting the bank charter in 2022.
That was the game changer. No question. Suddenly, the whole narrative around SoFi just flipped.
Why was it so significant? What did it let them do?
Well, think about it. Before the charter, they were more like a middleman, right? Connecting borrowers and lenders, maybe using partner banks.
Okay.
With the charter, boom, they are the bank. They can take deposits directly from customers like you. They can issue loans directly using those deposits.
So they control their own money supply, basically, their cost of capital.
Exactly. And that lets them capture spread income, the difference between what they pay on deposits and what they earn on loans. That's the core profit engine of traditional banking.
But without all the expensive branches.
Precisely. They get the banking economics without the legacy overhead. And for you, the customer, this meant SoFi could suddenly offer much better interest rates on savings, more competitive loans. They weren't just disrupting banks anymore.
They were the bank.
A digital-first bank, yeah.
Which brings us to the profitability question. For ages, it felt like, the bulls were saying it's coming, and the bears were just pointing at the losses.
Yeah, that debate went on for years.
But then, around 2024, things really seemed to turn. What did the numbers actually show now?
The numbers are pretty compelling now. If you look at Q1 2025, SoFi reported its sixth straight quarter of GAAP profitability.
GAAP, so like real audited profits.
For real profits, yes.
Yeah.
Not just adjusted figures. Net income was $71 million. Revenue jumped to $772 million. That's up 37% from the year before.
Wow.
And adjusted EBITDA, a good measure of operational health, hit $144 million. These aren't, just blips on the radar. It's a clear trend.
And Wall Street noticed.
Oh, definitely. You saw analysts who were skeptical before suddenly issuing buy ratings. The whole tone shifted, even like the online chatter changed. These are numbers you couldn't really argue with anymore.
Okay, so they're profitable, but how are they growing so fast? What's the engine there? This source mentioned something about cross-selling, like a software company.
Yeah, that's a really key insight. They're not just trying to get you to open one account. They want you to use SoFi for everything. Checking, savings, loans, investing, insurance.
The whole ecosystem Naito envisioned.
Exactly. And it's working. In the last quarter, something like 44% of new members took on more than one product right away.
That sounds sticky.
Incredibly sticky. The source called it Gorilla Glue stickiness, which I thought was pretty good. And think about it. In Q1 2025 alone, they cross-sold almost 3 million products. That means deeper relationships, higher profit per user, and people are much less likely to leave.
Okay, that makes sense. But there's more to it, right? The fee machine idea.
Right. This is crucial. Almost half, 41% of SoFi's income now comes from stuff other than lending.
Like what?
Interchange fees when you use their cards, insurance commissions, licensing fees for their platform, that's Galileo and Technices again, and other business services.
So back to the plumbing business.
Exactly. The source uses this great analogy. It's like Amazon Web Services for banking. Every time some other fintech uses Galileo's tech to process a payment or run a service, SoFi gets a cut.
That sounds like a much less risky way to make money than just lending.
It's much more capital light. It gives them strong revenue streams even if the lending market gets choppy, and it reduces their overall credit risk. It's a really smart diversification.
It really does feel like they're scaling differently. You see traditional banks maybe add a few branches, grow slowly, like Moss, maybe. But SoFi seems more like bamboo, just shooting up.
That's a great way to put it. And the numbers back up that bamboo growth. Q1 2025 again, over 800,000 new members. Total members now 11 million.
Wow.
And the accounts enabled by their platform, thanks to Galileo, over 158 million. Deposits are over $27 billion. This isn't slow incremental growth.
And it's not from building branches, obviously.
No, it's smart digital marketing, making the app easy to use, integrating with social media, bundling products in ways that just make sense to people.
And they're making strategic moves with that scale, too, right? Like that Fortress partnership.
Yeah, that was very clever. In March 2025, they announced a $3.2 billion loan partnership with Fortress Investment Group.
What does that actually do for SoFi?
It's multifaceted.
Yeah.
It lets SoFi originate more loans because they know they have a partner to sell many of them to.
Okay.
This frees up SoFi's own capital so they can lend even more or invest elsewhere. It de-risks their balance sheet because they aren't holding all the loans themselves. And they generate fee income from originating and servicing those loans for Fortress.
So they make money originating the loan even if they don't keep the long-term risk.
Precisely. It's another way to leverage their platform and origination engine without tying up all their capital. Very smart.
Okay, it sounds incredibly impressive. But, there's always skepticism. I saw Bank of America, for instance, downgraded them earlier this year. Worries about valuation, maybe interest rates, student loan policies, recession fears.
Yeah, and those aren't unreasonable concerns for any financial company. Valuation is always a debate, especially after a strong run. And macro headwinds, interest rates, the economy, they affect everyone.
But SoFi is maybe better positioned now?
I think the argument is yes, they're much better positioned than they used to be because of that diversification we talked about. They aren't just a student loan company anymore. They're not even just a consumer lender.
Right.
They have the lending, yes, but they also have the massive tech platform generating fees, the deposits from the bank charter. They're more nimble, more insulated. They haven't bet the entire farm on one single thing.
So looking ahead then, the road ahead, as the source calls it, what's on the horizon? Just more growth?
Seems like it. They're pushing hard on multiple fronts. Home loans originations are up 5 times since 2023. Credit cards are apparently getting good traction.
Okay.
Their investment platform keeps adding features, fractional shares, crypto. And the B2B side, Galileo, is expanding internationally, signing up clients in Latin America and Europe.
So spreading the tendrils further.
Pretty much. And the source makes a key point. If or when the Fed starts cutting interest rates.
That helps banks, right? Lower cost of funds.
Yeah. For a company like SoFi, with its growing deposit base and efficient model, lower rates could be like, quote, gasoline on the fire. It could make their lending even more profitable and potentially accelerate growth even further.
So the takeaway isn't that SoFi is just some hyped up stock?
Not according to this analysis, no. It's less about hype and more about execution. They started somewhere specific, sure, but they refused to stay there.
They evolved.
Dramatically.
Yeah.
Into, a real bank, a real tech platform, a business with recurring revenue, users who stick around, and lots of different ways to grow in the future. Optionality, they call it.
It's a fascinating turnaround, which leaves me wondering, are there other companies out there, maybe ones we still think of as niche, that are quietly building the kind of foundational plumbing for their industry, like SoFi did with Galileo?
That's a great question.
And maybe, how do the old guard, the traditional players, even respond to this kind of tech company scaling? It's so different from how banks usually grow. It makes you wonder what act other companies are really in right now.
Definitely something to think about. Who's building the next generation of infrastructure while everyone else is focused on the surface?